Everyone, on behalf of Nirmal Bang Equities, we welcome you all to the fourth quarter FY19 earnings conference call of V-Guard Industries. The management is represented by Mr. Mithun Chittelapilli, Managing Director, Mr. Sudarshan Kasturi, Chief Financial Officer, and Mr. V. Ramachandran, Director and Chief Operating Officer. I now hand over the call to the management for their opening remarks, post which we can take questions. Over to you, sir.
Thank you, Chirag and Nirmal Bang for hosting us. A very warm welcome to everyone present and thank you very much for joining us today to discuss the operating and financial performance of our company for the fourth quarter and year ended 31st March 2019. We have delivered a top-line growth of 12%, GST adjusted, EBITDA growth of 20% and PAT growth of 24% for full year FY19. Despite the challenges faced during the year in terms of favorable weather conditions, floods in Kerala during Onam and volatility in commodity and currency, the growth has been driven by the water heater segment, fan segment and wire segment. Our emerging product categories of switchgears, modular switches, kitchen appliances and air coolers continue to witness strong traction and have contributed close to 180 crores to the top line for the full year. Non-South markets continue to make steady progress, recording a growth of 15.3% in FY19 and contributing 39% of total revenue as compared to 37% for the previous year. Growth in non-South markets in Q4 was impacted by delayed onset of summer. We continue to invest in growing our presence further and envisage 50% contribution from this business over the next 4 to 5 years. South markets saw a strong recovery in the second half of the year, recording a robust growth of 16% in Q4. Let me delve into the numbers for the fourth quarter. Overall growth in Q4 came in at 12.3%, driven by wires, modular switches and switchgears, kitchen appliances segments which grew 25%, 52% and 42% respectively. Modular switches were launched in some of the key non-South markets, while air coolers were rolled out to more South and non-South markets in Q4 of FY19. Gross profit for the quarter was up 5% YOY to 178 crores in Q4 FY19. Gross margins were up 30 bps YOY to 29.6%. During the quarter, we were able to land some pricing actions to bring margin trajectory back on track to 11.5% in Q4 of FY19 as compared to 6.3% in Q4 of FY18. Advertisement promotion spends stood at 4.6% of sales in Q4 of FY19 as compared to 9.7% in Q4 of FY18, which were higher on the back of the brand rejuvenation and relaunch exercise launched last year, Q4. Subsequently, PAT grew 115% YOY to 59 crores in Q4 of FY19. Our prudent approach and focus on profitable and sustainable growth has resulted in strong cash flow generation to the tune of 152 crores in FY19 as compared to 55 crores in FY18. Our return ratios continue to be strong with ROE and ROC of 18.4% and 21.3% respectively. Further, we have net cash of 157 crores on balance sheet as on 31st March 2019. We strive to strike a balance between investing in the business and regularly rewarding our shareholders. The board has recommended a final dividend of 80 paisa per equity share for FY19. The board has also approved the proposal of raising funds by way of issuing secured or unsecured redeemable non-convertible debentures in one or more tranches on private placement basis within the existing approval limit of borrowings of 750 crore. The proceeds will be utilized to pursue inorganic opportunities that support our long-term growth objectives. To conclude, we continue to invest towards enhancing organizational capabilities and improving our competitiveness in the market to lay foundation for the next stage of growth. Efforts on innovation, R&D and product development will continue to be made in order to roll out differentiated offerings and drive profitable and sustainable growth. We have built a strong network of 30,000 plus retailers and plan to add 3,000 to 5,000 retailers across the country every year for the next 5 years. On that note, I would like to thank you once again for your participation and would like to hand over the floor to the moderator for question and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time, press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Megha Sharma from Motilal Oswal. Please go ahead.
Hello. Hi.
Yes, hello.
Hi, Mithun. Thanks for taking my question. I have a question on the wires segment. Pretty strong growth there. Just wanted to understand what's driving this growth. Any pockets or regions where growth is particularly strong? And also if you could comment on the competitive intensity in this segment, please.
The wires and cable segment, if you look at Q4, there has been a strong growth of 25%. But for the full year, the growth is about 11.8%, which is, kind of similar to the kind of growth we've had in the previous years. Obviously, we had a very poor Q2 and Q3 because a lot of our sales in the Kerala region were impacted. So obviously, a lot of the sales got pushed to Q4. That is one. Also, I think depending upon how the copper prices move, the trade also has a habit of upstocking and destocking. So that will continue to happen. So maybe good to also look at the full year number and not only the Q4 number.
Sure. And can we have the mix between volume and value this quarter?
Okay. If you look at for wires, right?
Yes.
So wires, if you look at Q4, the value growth is 25% and the volume growth is 29%. For the full year, the value growth is around 12% and the volume growth is 10.9%.
Okay, perfect. Thank you.
Thank you. We have a next question from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good afternoon, Mithun. My first question is on the stabilizer business, wherein we saw muted growth this particular quarter, despite reasonably strong room AC sales in southern part of the country. So what has this been on account of? How is Q1 panning out for stabilizers, and what should be the sustainable rate of growth for this category going forward?
Yeah, I think stabilizers.
Participants, kindly stay connected. We lost the line of the management. We will be dialing them back. Please stay connected. Ladies and gentlemen, kindly stay connected. So we are back in the conference. You may please continue with the answer. Thank you.
Yeah, sorry, we got disconnected. So if you look at stabilizer Q4, the growth for stabilizer is flat. It's primarily because although the south had a reasonably good growth, the northern markets and the western markets were quite subdued. So on an overall basis, it did not grow. But I think from Q1 onwards, that means from April onwards, there has been reasonably good traction. So although we had pretty warm weather in March in south, the rest of the country was relatively, cool.
And going forward for next couple of years, how do you see this category growing for the country as a whole?
So, of course, stabilizer is a very old and mature category. So, we will probably track the, market growth. I don't see us growing much faster than the industry. But having said that, we had, pretty low growth in the last 2 years. But this year, we could post some higher number. But I think, in a bad year, we probably will grow at 7.5%. And in a good year, we'll probably grow at about 12%. So, that's the kind of range probably stabilizer will grow.
Understood. And in non-South India markets, in Q4 we had 6% revenue growth. You attributed it to weak, unfavorable weather. Is there any other reason also that contributed to demand being weak in Q4, and are you seeing any recovery signs in Q1?
So I think we are attributing it to weather because, the same country, some part of the country, sales have been very good. So I wouldn't say, so of course there is some liquidity crunch in the market and there is some overall slowdown. But that is not something that has suddenly materialized in Q4. That has been going on for maybe a few quarters even before that. But, collections were getting delayed and all these kind of issues were going on, at least for last 8-9 months. So that is why we feel that, we are seeing two divergent kind of views that we are seeing a huge, some strong traction in the southern part of the market and some weakness in the northern part. So that's why we are attributing this to the weather. Also, if you look at previous year, we had a very subdued growth in south for Q4. So that also will help because the base is low.
Right. And from April onwards, we have started seeing a recovery in non-South India markets as well, right?
I think this year the summer has been fairly strong in south and eastern parts of the country. The northern markets have started to get warm maybe since May, but not April. Hopefully hopefully May and June, the northern markets also should compensate for whatever the slow start we had earlier.
Understood. Thanks a lot, sir.
Thank you, sir. We have next question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Thanks for taking my question. One is to ask you on the stabilizer market once again. So, what is your sense on the unorganized market which is there in stabilizers, and are you seeing a shift from unorganized to organized post-GST regime there? And also, is it that you make pretty high profitability in stabilizers? Has it seen some kind of a dip recently because of new competitors coming in?
Yeah, hi, this is Ramchandran here. So, yes, there is an unorganized sector, and if you do look at over time, the unorganized sector is shrinking, and, more and more branded players are taking the share. But also, there are, many of the air conditioning companies also which are selling, stabilizers under their name or also capturing some of that. So, there is an underlying shift towards this for sure. Second question on the margin part, I think, margin part is holding up, as far as stabilizer is concerned. It is volume which was under pressure last year, and which is getting a bit better now that the season is starting to work.
Got it, sir. And in terms of pumps also, so basically we had seen a couple of years of good growth. Is it that is it an industry phenomenon or a region phenomenon or a company-specific phenomenon because of which?
I think last year, pump market, particularly in south, was under pressure. And, since, traditionally we have a higher share of business from south, the overall pump numbers were looking muted, even though, we had very high double-digit growth in non-south. So, I think that was the context, and we expect the pump to normalize, this year in south also.
And how much of it would be residential and how much of it would be agri, sir, pumps for us?
Our pump is mostly residential.
Okay.
Agri may not be more than 15% of our revenue, 10 to 15% of our revenue.
Got it, sir. And stabilizer sales across AC and TVs and refrigerator, if you can give the breakup, it will be really good.
See, the value-wise, 50% of sale is coming from air conditioner stabilizers and maybe 25% each from refrigerator and television. So the value, volumes, of course, because the value of AC stabilizers is higher than the other ones. So 50% share is from air conditioner stabilizers in value terms.
Got it. And our UPS business continues to keep growing. So that is something which is contra to how the power situation has panned out. So what has led to the growth in the UPS space for us?
I think, if you look at the UPS business, right, our penetration is much lower than what a brand of our size and scale can punch. But also, we are, expanding this business carefully because, we are also trying to manage margin and the product mix. So that is creating a situation where, our, what I would say, scale of DU business in the marketplace is lagging our potential. So, what really is happening is we are realizing potential that, we could otherwise, enjoy.
Got it. And my last question is regarding the new products. What would be the kind of profitability among switchgears, cooktops and air coolers? If you can give the segment-wise or even on an entire or club-together blended basis also, it will be really helpful.
So I think, it is not meaningful to talk about, profit of these categories at this stage, given their size and scale and the investment happening on marketing side. Suffice to say that, gross margins are, similar to what I would say, competitors, maybe, 3 or 4 percentage point lower, because, we may not be into manufacturing in switchgear where, we have a subsidiary called GUTS. We may be comparable to, other players, but in, the other categories like kitchen and all where we are not into manufacturing, it will be about 5-6% lower compared to 5% lower compared to those who are in manufacturing, right, at gross margin level.
Got it, sir. Yeah. Thanks a lot. I will come back in the queue.
Thank you. So we have next question from the line of Ashish Poddar from Anand Rathi Securities. Please go ahead.
So my question is again pertaining to the new emerging products. Currently, this is less than 10% of your top line, but if I see the growth rates, though on a small base, it's growing at a very fast pace. So in 2-3 years, what kind of contribution you see from these new product segments?
Yeah, I think these categories are growing very fast and they are very healthy as far as gross margins are concerned. And we are continuing to aggressively expand and invest in them. So I think, of course, they are already around 7% of revenues. I think even from the current level, they can, they can grow to something like 12 to 15% of our company revenues going forward. I don't see why not, because even today we are not having very high share in any of those categories. We have just scratched the surface.
So any new product category you are considering as of now to enter, or perhaps you will first stabilize these product lines and then perhaps think what's the strategy internally?
See, as a company, from time to time we look at our portfolio and we will, see what we can add and what we can delete. It's an exercise we do it on a continuous basis. So, of course, every 2 or 3 years we will keep adding one category. We may not add too many categories, but every 2-3 years, V-Guard today has the potential to incubate, launch and scale one category in every 2-3 years, and that will continue to happen. Independent of that, these categories we spoke about will also continue to grow because we launch products usually in phases. So we launch with our strongest market first and then slowly work our way to the rest of the country. So all of them, will grow as well.
Okay, my last question is on the fundraising plans. Is there any timeline you have for this, and any targets which you have identified, and any sense you can give in what the product category or which region you are looking for this?
No particular timeline. It is whenever we come across a target which fits into a long-term strategy, we will go with it. Now, is there any specific target on the table? Not yet. We are looking some time.
Okay, my last question is on the brands and promotion exercise. We saw a massive exercise towards the FY18 end. Do you have any further such kind of plans in near future, or now it is stabilized and the other expenses which we see will be normalized in coming quarters? It has already done, but will we see any increase in the other expenses going forward on that account?
So the brand relaunch is of course a one-time activity and that got completed, and a lot of the expenditure was borne in the last financial year, that is FY18. So obviously in FY19 onwards it's normalized. So we will not see such high elevated levels of spending because there's a lot of one-time costs of retail, branding, which runs into 10,000 touch points. So those are all one-time activities because after that there will be regular maintenance level activities which will be going on. As far as the other expenditures are concerned, we have incubated and we have added some new categories. We have also strengthened the back-end things in terms of our quality, our supply chain, our product innovation process. So a lot of work has gone to, in terms of strengthening these processes. So obviously we had a spike in some of the expenditures because it's related to some works we have done there. But it may not go up significantly going forward. So it may probably grow at the same pace of sales or slightly less.
Okay, sir. Thank you so much and all the very best.
Thank you, sir. Participants, to ask a question, please press *1 on your touchtone phone now. We have a next question from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
Hi, congratulations on a great set of numbers. So my first question is related to the strategy. Now we have seen that in Q4 we had seen headwinds such as delayed summer and throughout the year we had seen Kerala floods impacting us as well, and then there is a talk of a demand slowdown evidently in the consumption in India currently, but yet we are delivering on numbers consistently. So what in your opinion is differentiating us or enabling us to do so?
See, I think when we started the year, we were expecting to grow around 15% on a like-to-like basis. We have ended up with about 12%. So it's not that we are immune to the slowdown. Of course, we have had a 3% off target as far as we are concerned. But of course, being a challenger brand in many markets, we have the opportunity to grow. And of course, like I said, we have got into some new categories, and there we have finally, probably our different parts of the product piece have fallen into place in terms of we have the right product lineup in some cases. So these are all helping us. It's not that we are immune. We are also getting affected. I think but I think we probably felt the slowdown much earlier in the year, maybe in Q3. So we decided to tighten our commercial terms. We decided to not to aggressively push material into the market. So that has helped us to even out the sale a little more.
Got it. Secondly, in terms of price hikes, it's commendable that in Q4, despite such challenging environments, you had been able to take price hikes. Any visibility going ahead during the year that you will be taking price hikes and in which categories, if so?
I think in many product categories, we have taken the requisite percentages of price hikes. And currently the commodity environment is not in an inflationary trend. In fact, it is stable, and there is a possibility that it could go down if the trade wars between countries escalates. So that way, I don't foresee a requirement for any more, huge number of price hikes for the current year. If the commodity environment stays like this, we should be fine.
Got it. And could you quantify broadly what was the quantum of price hikes you took?
So it varies. I think on an average, if you look at company-wide, around 2%, but it will vary from product to product, but around 2% would be the average increase that we have been able to, because that is the kind of impact that what we had in margins in the previous quarter.
Got it. And just one last bookkeeping question. The other non-operating income has been quite high this quarter, almost 2x year on year. Could you throw some light on that?
I'll ask Sudarshan to okay, it looks like cash balances have been going up. So I think the cash generation was high in the current year. So it's the income from investments which is high. It's basically income from the investments. Yeah.
Got it. Thank you and all the best to the team.
Thank you. We have a next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi. Sorry, I joined the call a little late. I don't know whether you've answered that or not. I just have two questions. One is, when we look at the stabilizer sales, South has itself picked up the AC sales from the Feb end. That's what the southern South players tells us. And they have shown a good amount of growth in the southern AC sales. That doesn't get reflected when we look at your numbers. I understand would have not picked up for you, but given the pricing and given the inventory which you would have, if you can throw some light on that, that's my first question. Second, if we remove the one-time brand exercise, though it should not be treated as one time, but as the company has been saying it for one time, still there is a contraction of margin by almost like 100 basis point plus. What's your outlook there on the core margin, excluding other operating income for next year? Thank you.
Yeah, this is Ramchandran here. Just answering your first question on stabilizer. Basically, our overall stabilizer growth in Q4 was, low at 3%. However, we get, over 50% of our stabilizer revenue from non-South. And therefore, this represents the average of South and non-South growth. Our South growth has been positive in Q4, coming closer to double digit, and it is continuing similarly in Q1. So we are also getting, what I would say, our stabilizer sales are also following the trend in the market. Yeah. Just as, if you see some of the major, we don't have the, access to unlisted company data, but some of the listed company numbers that we have seen, we are also seeing that Q4 overall for air conditioning is muted for them. And I think that, our overall national numbers are better in stabilizer, in terms of growth compared to what we have observed in the, Q4 data of some of the air conditioning companies. It just so happens that, the stabilizer from non-South is much more than the company average of sales from non-South. It's about half and half. Half and half now, yeah.
That's helpful. On the market.
Yeah, the second part is on, can you repeat the question?
So, when we exclude the one-time exercise, 45 crore what you took in last year versus a 10 crore this year, margin still contracted by 100 basis points on an average. What's the outlook of core margin, excluding the other income which you include in your guidance? How should we read into it? Because in the last 3-4 years, becoming a challenge to touch a 10% number. So if you can throw some light on that.
Yeah. See, the current year margin decline is not related to any, pricing or margin pressure in our product. There are two things that have to be kept in mind. One is that, the stabilizer growth was not in line with planned growth, and stabilizer is a higher margin product. The absence of the planned growth of stabilizer. So, see, I think you have to see this in two levels, a gross margin level and, EBITDA level. Right, EBITDA level, you may be observing a 1% dip, but at a gross margin level, by and large, our gross margins are maintained. Now, we have invested, keeping in mind the higher growth rate of around 15 to 16% for the company. So, on that basis, we have continued to invest in terms of people, infrastructure and all that. Our sales revenue has not materialized in the same manner because of, we had the Kerala floods and, we had a, poor summer for stabilizer in the early quarter. So, these two have contributed to our revenue variance from plan. However, since, both these are one-off, we have decided to continue with our investment plan so that our plans are not interrupted. So this is really, so there is no gross margin pressure per se, right? It's coming from that. Now, beyond this, there are some gross margin pressures which have arisen from, input cost increase and, the, impact of commodity because some of our products are sourced from China and, sold. So those impacts are there, but at an overall level, if you see, we have maintained gross margin and that has, our price revisions have neutralized some of those aspects, yeah. And some of the revision in Q4 is actually, positively contributing to this picture. So I hope you get the picture. It's related to our expenditure side. It's not related to pricing and margin side.
So what's your outlook on margins?
I think this year we had around 9% EBITDA. I think we wanted to hit 10% EBITDA this year, but I think in the current year that should be possible. So, because I don't think we are going to see the kind of headwinds we had. I mean, we had a very, very bad H1 last year. This year it looks like it's going to be much stronger.
This 10% is including the other income, right?
It will be including the other income, yes.
Got it. Okay. Thank you. Thank you very much, boy. Thanks.
Thank you, sir. We have next question from the line of Tanuj Makhija from Bank of America. Please go ahead.
Thanks for taking my question. So if I look at fans and switchgears, they are fairly organized markets. So could that be a limiting factor for you to increase in scale in fans and switchgears?
No, on the contrary, switchgear has been one of our fastest growing categories. I think the kind of categories we have entered in the last 5-6 years are all categories with a lot of barriers to entry in terms of product quality, certifications, huge investments in terms of molds and dyes or plant and machinery. So the investments we have made in the last 5-6 years are all products where it's difficult to enter, but the margins are higher. They are not Me Too products, and they require a lot of specialization and skills. So I don't think that that is a limiting factor. Of course, they require us to make huge investments, which we have done. So once that is done and we have the right product lineup, it's growing well. For example, switchgear growth in the full year has been quite strong. I think close to 35 to 40% for the full year. And this is in the face of a huge slowdown in real estate and construction. So I don't see that because it's an organized market, it's difficult to increase. It's just that your incubation time is much longer, so it takes you 2-3 years to launch the category.
Okay. So, sir, given that you're gaining market share in these organized sectors, if I can ask, sir, who is losing market share in switchgears and fans?
I think various things are happening. I think one side is post GST, right? If you take there are a lot of smaller players, and there is unorganized business, and there are businesses which are happening in different ways, particularly in the wiring accessory side. I think those guys are getting impacted because their prices are going up and their relative competitiveness is getting impacted. So I think I would say unorganized sector and unorganized business in the case of wires. Unorganized meaning unbilled business and all that. So I think that part is getting impacted as far as the wiring accessory is concerned. I think on the fan side, obviously given our strong presence, we are gaining on fan stronger growth in non-south than south. I think in non-south also has unorganized sector. So I think collectively, if you look across companies, the unorganized sector is getting impacted. Second thing that is happening is I think that there is trading up from entry-level model to mid-segment, right? And and as some benefit to us is coming from this process also, because our portfolio is focused towards the mid-segment and the high end of the market, right? We are relatively thin at the entry level, so I think these two factors are probably source of business.
Okay. So just to confirm, so you're saying that you're getting market share from unorganized players. So by and large, organized players.
No, I'm saying on wiring accessories, there may be organized players doing unorganized business, or there may be unorganized sector. When I'm talking about wiring accessories, I'm talking of switches and switchgear. Okay. So I'm just saying that, the way the gain happens, right, people lose to each other and people lose to other segments also. So, but I think fundamentally, the organized part of the market is growing much faster than the total market because of some shift from unorganized sector and sector of the market where, let us say that you have, on the shelf they look like, reasonably known brands, but behind them the way that they have been transacting before may not have been organized, and that was giving them some price advantage in the channel.
Understood. Thank you very much.
Thank you, sir. We have next question from the line of Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, hi, good afternoon, everyone. Sorry, this quarter our south market has picked up well. Could you please just give us some idea about how much like Kerala has contributed because there has been like replacement demand was pending. So how much that has contributed to this part, and what do you expect that what is the growth rate that we can expect from the south market?
See, I don't have the state-wise number, but what you see happens is that when this event happened, the calamity happened in during Onam. A lot of the Onam is one of the biggest purchasing seasons in Kerala. It's like Diwali for the majority of the country. So when this particular event happened just 10 to 15 days before Onam, the complete purchases of all kinds of discretionary items got postponed. So that is what we are talking about. So I wouldn't call it just only replacement. The replacement demand would have happened in Q3 also, not so late. And rebuilding is something that is going on, and it is a slow process. It is going to take time. So I think what has happened is a lot of the purchasing decisions people would have postponed, and that would have all happened in Q4. So Q4 we have seen a strong revival in Kerala. That is true. I don't have the exact number. But I think it's more to do with the postponement of purchase. So if you look at the full year number, it's probably tracking our long-term average. Yeah.
So like despite like our entry into newer segments which are largely have a presence in the southern market, you don't see any material change in the growth rates in the southern market.
So, the way we enter categories, right? So we don't, hit the ground simultaneously launching in every state and in every retail outlet, right? So initially, our spread is narrow. Yeah. For example, let's take, we launch switches. Yeah. I think, after about, close to 18 months to 20 months, right, is when, we were gone pan Kerala, right? But otherwise, we were still, say, even 6 months back, we were still, not in all districts in Kerala. So what we do is, that, we slowly and gradually expand. So when we say we are present in South, it does not mean that we are present in every state and we are present in every outlet. It's a progressive journey. So obviously, as we are going progressively, the impact of, those categories on our overall revenue will be limited. For example, we have launched air coolers, but the number of outlets we will be there will be some key outlets, because our objective in the first 2-3 years is fundamentally to, derive comfort on our, product, our lineup, our pricing, and, we learn the method and way to sell. So the focus is about that and, deriving confidence than actually going and hitting out into every outlet and, getting, trying to go for numbers. Because, there are risks associated with that, because if we don't get something right, then, we have problems. So this is how we are going. So it's a progressive journey. So you may not necessarily see the impact in the way that you are visualizing.
And you mentioned that stabilizer in a good year can grow around 12%. So that is in value growth or volume growth?
I'm talking about value growth. So you can budget maybe a 1.5%. The price increases are not done every year, but maybe a price increase CAGR which is about 1 to 1.5%.
Okay, so this 12 is value growth.
Yes.
And if you can just give us an idea about the capex number which you plan to do it in the next 2 years.
Next 2 years, capex would be somewhere around 130, 140 crores.
Combining both the years.
Yeah.
Okay. Thank you so much and all the best to you.
Thank you. So we have next question from the line of Ashwini Karlekar from HSBC. Please go ahead.
Yeah, hi, this is Srinidhi from HSBC. Sir, I have a few questions on your distribution reach basically. So you have a 30,000 reach. May I ask how much of this distribution reach is split between South and non-South? And within these two markets, dependence on wholesalers or distributor, is it any different across these two markets?
So I think, fundamentally, we have a more distribution-oriented approach in South and a more direct dealing approach in non-South. We are not into wholesale in any significant way. The reason we are more direct dealing in non-South is because, we are investing time, energy and effort to build our business in non-South. Whereas in South, where the brand is, extremely well established, distribution through distributor, right, is a sustainable way to go. So even new categories we are launching, we are able to sell to our distributor, who is in turn able to sell to the retailers. But in non-South, since the responsibility of market development is there, the way a company can directly nurture a retail outlet, as opposed to distributor is a bit different, right? So the fundamental difference is proportion of direct dealing business in non-South will be much, much higher compared to South. That's the difference. Now coming to, what part of our network is, maybe about 60% of our, retail partners are in South and 40% will be in non-South. Yeah? Because in the South, we have deep penetration. Yeah.
Right. Yeah. So largely similar to sales mix.
Yeah. We are, present in focus clusters. Yeah. Because we try to make sure that we have profitable and viable clusters, where we can, grow and there is a core nucleus around which we can build our business.
Right. And sir, you touched like you have currently about 30,000 plus retailers. So in your view, how large is the universe? Like how many are the electrical goods retailers are there in India according to you?
So if you add electrical goods and consumer appliances and home appliances, that's our core, group. It will be close to 80 to 90,000 retailers are there. We don't do luminaries and lighting, so we don't do kirana stores. So this is just electrical, goods.
Right.
EHA counters.
Okay. So universe is about 80, 90K. Right. Okay, sir. Yeah. Thanks for answering one question and all the very best.
Thank you. So we have next question from the line of Gaurav Nigam from Catamaran. Please go ahead.
Yeah. Thank you, sir, for taking my question. Sir, in some of the other categories like wires and water heaters, again, the same question, who are we gaining market share from, and is our strategy of, are we continue to focus on reducing the prices to gain market share, or are we planning to do something else going forward? That's my question.
So, we are not reducing prices, right? So, I think the gap between, in fact, we've been, our gross margins have grown in the last 5 years at company level by about almost 5 to 6 percentage points. So, the reason our EBITDA growth is not reflecting that significant gross margin growth is because we are investing in the company to build, our long-term capabilities, be it, IT infrastructure, business process. We have set up manufacturing infrastructure across major categories, and, they all initially run at lower efficiency, and there is some cost, which comes through that, which impacts our P&L. Also, another thing to be borne in mind is, as we have moved from a small size to a mid-size company, and, we are putting in place, business systems, to support, a large-scale business, the kind of talent we are hiring is very different, and the cost at which this talent is coming is very different. So there's a lot of, there is a significant growth in gross margin. Most of it has gone into, investing in our future. Some of it is, reflecting in our EBITDA, long-term EBITDA growth. So that's the, context. Now coming to, where our growth is coming in wire and water heater. I think in wire, right, we are, still, expanding our distribution network, across non-South, and, that is helping us also. In the case of, water heater, it is, fundamentally, what I would say, our product portfolio and our relationship in South, which is helping us to grow. Again, it is mixed, in some categories and some geographies we are maintaining share. In some others we are growing. Yeah. No doubt, compared to, most others, our growth rate in water heater will look significant, but there may be others who may be growing similarly or better than us. Yeah. We are under-indexed in some channels, and that is giving us, opportunity to grow faster. which have a significant, what I would say, revenue. So non-South is an area, of course, we are growing, and that is also helping us.
Sure, sir. And sir, second question is, what has been the risk across all the new categories that we are going into, fan switch gears, water heater and wires, what has been the response of the market leaders on these categories, and how are you tackling them, mainly non-South market?
Yeah, I think market leaders are not focused on us. I think they have significant business size and scale. And, I think also as the business environment is weak, they are focused on fighting their own battles. So I think, of course, they are observing that, we have been able to make a pretty decent entry in terms of, the kind of product offerings that we are able to bring to market and, the kind of feedback that we have got from consumers. So they have taken note of the fact that, we've been able to overcome barriers to launch, entries into new categories smoothly. Yeah. But I think, also given our philosophy in terms of, being prudent about, how we, expand and grow our businesses, I think they also realize that, our approach is more gradual, so they're not focused on us.
Okay. Fair enough, sir. Thank you for the answers.
Thank you, sir. We have next question from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you. Just wanted to know, first you said you're maintaining a 15% revenue growth guidance. Can you help us understand what categories will, how these, the growth will come through, what categories will drive the growth?
So if you look at this year, we had a flat growth in stabilizers and we had a flat growth in pumps. So we hope that these two put together is about 30% of revenues. And we did, with this being flat, we did a like-to-like growth of 12%. So I'm hoping that if these two categories grow at 10%, we should hit 15% growth. Otherwise, more or less the other products have delivered according to plan and they will continue to grow at similar pace.
Sure. Second question I had is with respect to the margin. Would you be able to give what is the EBITDA margin in South and non-South?
I think, I think we will share that offline. I don't have it with me right now.
Got it. And another question I had, you said about 120, 130 crores on the capex. Can you give us some idea as to which products we are looking at capacity addition and what kind of expansion would that be?
We are looking at expanding, the water heater manufacturer. There is a Sikkim plant already working, so some expansion will take place.
Okay.
Then we are also planning to bring in fans manufacturing in-house. And the rest of it will be, other molds and all that for new categories.
Yeah, I think wire also we are expanding capacity because I think we are hitting around 85-90% in some months.
Understood. And just in terms of the new products, is it possible to give an indication as to of your distribution, let's say a fan or a switchgear, how much has it been penetrated, maybe 10%, 20%, a broad idea, just to get a sense as to what kind of opportunity we have in the existing distribution itself for these new products?
See, if you look at fans, if you look at fans, South India is roughly 2,500 crore market, and we will be doing something like 150 to 160 crores. So that's the kind of market share we have. It's not 6-7%, and non-South is very, very low, kind of penetration. So yeah, you can assume that our penetration is still very, very low. Maybe in some markets like Karnataka and Kerala, it's slightly a bit better, but in other markets, it's still a long way to go.
Got it. Thank you so much. I'll come back in the queue. Thank you.
Thank you, sir. We have next question from the line of Mehul Mehta from SBA Capital. Please go ahead.
Good evening, gentlemen. With regards to my question is about air coolers business. Are we satisfied with our performance, particularly in the light of low base of ours, like last year we started?
So I think as far as last year was concerned, we came in very late. Yeah, as far as last year was concerned, we came in very late, and this year, we've launched. So we had one platform last year, and then we launched a new platform this year. I think the air cooler business is a seasonal business, and the timing of being able to get the product into market is crucial. Most of the sales actually happens ahead of the season, and there is a lot of pre-booking that happens when people pay advance and buy the product. So I think as we had a significantly improved platform, I think the trade was our trade partners were betting on our new platform. Two things happened. So one is as this platform was not in place for much of the early part of the year, the orders for that were not gathered. We had planned to bring this out in the month of I think first week of February, but unfortunately it got delayed by about 45 to 60 days before the full range could come out, right? Theoretically, I mean, from a project point of view, I think, we probably, bought out the model much faster than, what we have witnessed people would be able to do ordinarily, when they bring a new product to market. But I guess, it was an ambitious assumption that, we would be able to, get enough of it out, to make a significant sense.
Also, one more thing is, if you look at the air cooler market, the largest market is North. And North, the weather also has been delayed, and it would be, you would have seen the numbers of some of the cooler companies also reflecting similar. It has not been a very great growth for many of them. So
but maybe do you expect, sorry, how are we faring, say in current months, how is the season going now?
I think this year we should do well. I think again, because we missed the window to launch the new platform, the bulk of the sales will still continue to be in the older one. I think, but we are expecting a huge bump up in Q3 and Q4 when bulk of the sales will happen. So this year I think we should do far better. Yeah, I mean.
So a couple of more points. So, if you want to get a sense of, how we are doing, one is that, our air coolers have been extremely well received. What we launched in the first season, they are doing very well. There are no complaints, and, consumer satisfaction is very, very high, and trade satisfaction is very, very high. The new platform that we have launched to market, is seen by many as, what I would say, it's extremely well received, and, is seen by many as, very differentiated from what is available in the market. But I think that, the ability to realize that into, Q4 of last year was not possible because of the delay. And the ability to realize it at scale in this quarter is not possible, as partly the season is going to taper off, and by the time we are able to ramp up production, it's going to be late. Yeah.
Sure. And how many states currently we are present in for air coolers?
So air cooler has been launched in maybe North and select East markets and maybe South, Hyderabad and Andhra.
But again, bear in mind when we are talking about launch, we are with a few retailers in each of these places, because, our objective in the first season was just to get a sense of how the different markets work. So in season one, we went to few of these retailers, and, as we had a supply crunch, we have stayed with those retailers. Yeah. In some cases, we had to, return the advances because we could not, meet the, the quantity required. Yeah.
Sure. My second question is in terms of enabling resolution, which we have taken for to raise about 750 odd crores. So last year I think it was about 500 crores. Now with the cash level also increasing on the balance sheet, and that further amount going further up, have we already narrowed down on something that's why we are increasing, or what's the sense behind increasing the amount?
We are actually not increasing. There was already an existing approval, shareholder approval for 750 crores.
but that was restricted only to bank borrowing and financial institutions.
So now you have included?
So we have just included NCDs also into the same thing, so it can be used for this purpose also. We had in between taken a 500 crore approval which is valid for 1 year, that has expired. So we have just combined two into one.
All right, thank you.
Thank you, sir. We have next question from the line of Hitesh Tong from ICICI Direct.
Hello, sir. Thanks for the opportunity. I just wanted to know, just you mentioned that you have a capex plan of 120 to 130 crore for for water heater, fan, and wiring capacity to increase the capacity. So I just wanted to know whether we are planning to more scoot towards in-house manufacturing and reduce the outsourcing. And if it is so, then how much are we planning? I mean, how much percentage should be in-house manufacturing, in the coming years?
See, I think progressively we have increased own manufacturing vis-a-vis outsourcing. So to give you some history, in 2006 or 7, when I joined the business, only 20% of the entire manufacturing was done in-house. So today that is at 45%. I think it will probably move to close to 60% in the next 3 to 4 years. And as we find that more and more new categories are gaining scale and they've achieved a critical mass, then those categories we will move in-house. That is one. Second is we were also importing certain products earlier, like water heaters and all that. Certain type of water heaters, all those also will get moved in-house, primarily because we want to insulate ourselves away from the currency risk that is there. Also, we would prefer the manufacturing happening closer to market so we can respond faster. And of course, it will help us to make much more differentiated offerings than, an outsourcing model would.
Regarding our wire business, do we have any proportion of cable into that, or it is 100% wire only?
We don't make any industrial or LT cables. This is all house wiring cables. Then we also make submersible cables, and any other type of cables like for LAN cabling and communication, audio video cables. So it's primarily for building wire and for submersible applications like pumps.
Okay. And so my last question is, regarding our employee overheads, which has increased, around 18-19% for the year. So, just wanted to know whether we should continue with this kind of growth, or the growth would moderate in terms of employee expenses. I'm asking.
So, V-Guard has been significantly investing over the last 7 odd years in talent. In fact, I think in our earlier years, this increase was, even to the tune of more than 20%. As, we aligned our compensation with, the scale of business and the type of talent that we wanted to attract. This has progressively come down to 16 or 17%. Now the compensation alignment part of it is complete about 2 years back. But right now, as we have been expanding to adjacencies, right, like newer categories we are getting into, then we have to hire development resource and manufacturing resource or supply resource, yeah. So and sales resource. So what happens is that the growth is looking higher. I think, much of our hiring is actually out of the way. And I think in the coming period, you should be looking at us, tracting, closer towards maybe 13% or 14%, as opposed to, 18% that you're seeing now.
Okay. Yes, thanks, sir. Thanks a lot.
Thank you, sir. We have next question from the line of Kamlesh Kotak from Asian Markets. Please go ahead.
Hello. Good afternoon, gentlemen. Just wanted to first understand you, just to reconfirm, you said 8 to 10% growth for stabilizer and pumps, right?
No, I was saying that last financial year, that FY19, both stabilizer and pump were flat. There was
so for the next year I'm saying.
For the next year we are hoping for a 10% growth, correct.
And what kind of growth you see in the UPS business?
The UPS business should grow at about 15 to 18%.
And what percentage of that would be digital vis-a-vis the standard one?
See, bulk of it is, the inverter business or digital UPS business. The standalone UPS is a very small part, maybe now only about 7-8% of the total UPS segment.
Okay. Secondly, if you can just get some color on the margin of the 5 mature categories. You may not share the exact number, but which of the margins are higher than average or sub-average kind of margin, if you can just help us understand that.
So, I think if you look at the margins, we'll talk about gross margins. I think wires and, digital UPS segment are, below average margins. And something like a fan, is probably at par with the company average. And something like water heaters, stabilizers, kitchen appliances, switches and switchgear, modular switches, air coolers are all above average.
Okay, fine. Another thing is what would be the strategy for the new SKUs? I mean, once you have these new businesses, do you have the entire range of SKUs? Or what is the strategy for addition of new SKUs to get those kind of categories more penetrated across the new categories, if you do?
So I think, the kind of SKUs we'll be launching, right, will follow the markets that we want to play. Yeah. And that is the first point. The second point is that, we will be centering initially around, those segments in the market where there is a larger opportunity, right? So this will be like a 80-20 approach where, 20% of the SKUs in the market which contribute to 80% of the revenue will be our priority to focus on, right? So that's how we start in any business, and then, with time, as we expand geography and as, the category matures. Because our focus in the first 3 to 4 years is all about building our internal capability, establishing credibility with the channel and consumer, regarding our ability to, make and deliver, differentiated products, in that segment. And also to understand the go-to-market aspects, right? So since this is our focus, we usually, go narrow and, in the learning phase, which is usually in the first 3 to 4 years, right? And then gradually, we start to broaden, and even as we broaden, we first go to adjacencies which are larger first, then, or geographies which are larger.
Okay. And lastly, what percentage you are planning to have for marketing spend this year?
I think we should maintain at the current levels. A&P expenditure should maintain at the current levels. So it has been largely remaining in a narrow range, apart from FY18. So we should maintain at the current levels.
Okay, fine. Thank you very much.
Thank you. So we have next question from the line of Chirag Lodaya from ValueQuest. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is, what would be our contribution to online and rural?
Rural is difficult to measure, and, its definition of rural is also difficult. I think, online, I think, we should be doing now, let's say, if you look at, if at company level, on company revenue, I think, we should be doing about 2%, maybe 3% in the case of, non-wire portfolio. Yeah.
Okay.
But relevance to relation to the categories which go on that channel, it will be like 6-7% of that.
Yeah. It will be much higher. So yeah.
Correct. And at what rate this would be growing? I mean, I just wanted to understand in next 2-3 years what kind of revenues we are expecting.
I think this is a secondary. So I think 2 things, right? So one, it will obviously grow much faster than company growth rate. Yeah. Second is, our focus again, is on, establishing fundamentals. So we are not like, because there are many challenges with online, right? There is channel conflict and, that there are, what I would say, capabilities that have to be built to, do well.
Right.
So I think, our focus is more on, what I would say, putting our, capabilities in place, as opposed to, rapid growth. So you might not see extraordinary growth, okay? But definitely, it will be much faster than company growth rate, maybe, at least more than 2x.
difficult to project. We're still in very initial stages, so it's difficult to project what trajectory it will take.
Yeah, I think if you look at our various categories, some categories about 15 to 20% of the sales have potential to move online, and that's the kind of opportunity within. It is not there for all categories. It is there for categories that are not very heavy. It is for categories that are mostly plug and play.
Got it. Secondly, on are you planning to launch any new category in non-South market in FY20?
So I think, like I said, it's always a gradual process. So in the current year, for example, modular switches is a key category that will probably get launched in some of the key non-South markets. Air cooler again will be another category. So all these categories will be launched in a phased manner. So that any given year the rollout will be there and it will be gradual. So any given year some of these new categories will be getting expanded into some of these new geographies.
And lastly, sir, in kitchen appliances, which is the key product which is driving this 81 crore sales, and which are the states we are currently present?
So we have the sales, the first product what we launched in kitchen appliances is induction cooktop, so that is the largest. The second one we launched was mixer grinder, that is number 2. And the third, last one we launched was gas cooktops, and that's obviously number 3. I think, these three are putting together, a revenue of about 81 crores. I think, so that's the mix. So it's these are only the 3 categories that are present in that.
It's mainly present in South, and it's Tamil Nadu, Kerala, and to some degree Karnataka. So these are the core states from which it is coming.
And so again, in this also we are expanding to other states in South, or will restrict these 3 states for
we will focus on South initially, and we will focus on building our network and building our equity with channel and consumer before we will expand out.
Okay. Can you just help me with stabilizer margins? Is it possible?
We don't share product-wise margins.
In terms of gross margin at least?
So we'll share that offline.
We just say stabilizer gross margins are higher than the company average. We don't give out specifics.
Fair, sir, fair. Thank you and all the best.
Thank you very much, sir. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Chirag Muchala for closing comments. Sir, over to you.
Yeah, thanks. I would like to thank the management for giving us the opportunity to host the call and to all the participants for their presence. Sir, would you like to make any closing comments?
We'd like to thank Nirmal Bang for hosting this call, and thank you all for participating.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.